Welcome to another quick hit review, the 7th of June. It is Friday and today we do have the FOMC out, so do expect some movement in the markets around 1:30. Up until then we can expect the markets to be maybe a little slow, maybe not moving a great deal. These types of times are quite good for the 5 range, maybe looking for a few advanced patterns, maybe a few small bat patterns and Gartley patterns, ciphers, things like that. There are a couple of things on the radar, a couple of trades I'm in. Something I'm looking at going into next week is this. I've already spoken about this once on the Aussie dollar CAD, and it's this this big head and shoulders. So price came into, I'm just going to put the structure level on at the closes of the candles, just here, and we had this area here. You can see we've put in multiple lower low lower closes now, and if we go to the 240, I'm just going to bring that structure level up to there, just to the closes of the candles, and you can see we've got wicks, structure, support, a couple of areas here of support again. And what I was looking at was this. We've got a swing in the market, which is the start of a pole, a move higher, a pullback, a move higher, a pullback. Now you can actually class this as the right shoulder. I'm personally not going to do that, but what I've been waiting for is this outside return to be violated. And as you can see, we've now had a confirmed break below, close below. I'm going to be looking for a pullback and a chance to get short, playing for 2 targets, something like that. That is obviously going into next week though. Euro yen, I did mention this was a trend continuation opportunity the other day, and we have pulled back now, but it's not forming the way I would have wanted to see it. So basically prices come into this this outside return just here. We did have a couple of days ago a nice hammer, and since then we've pulled right back up into that zone. And if I put a structure level on just at the lows just here, you can see we are down within the wick, so that's something to pay attention to. If we go to the 240, I'm just going to redraw this out. We basically had a move lower, a pullback, a move lower, a pullback. So this was the outside return, and looking for shorting opportunities. The problem now is that let me redraw this out properly. Yeah, it's on the closes of the candles. Okay, so we have technically held the highs just here, and we could be putting in a lower low, lower close right now, which would give you an entry into a trend continuation to play to the downside. This makes it very awkward. It doesn't look very nice. We had to move higher, we pull back, and once again we went higher. So I had no idea how this candle is going to close. It would have been nice here on the 60 to see some sort of a double top. Now we do actually have it, but it is invalid. Okay, this is quite important, well, based on my rules anyway. So there's the double top. We had the RSI confirmation, but what we did not do, if we look left, is we did not hold structure. Here on the 60 we violated to the upside. Okay, so this is a double top. We haven't as yet had a confirmed break below, close below the V point, but we violated structure on this time frame, and I cannot take it. In fact, just let me put a structure level on just where we closed and see what structure level it came in at. Just one level. No. So unfortunately it just isn't something I can take. If you are going to take this, I would wait for extra confirmation, wait for a violation of the V point, wait for a pullback for a 2618. Hopefully then, as a bit more confirmation, you may have a lower low lower close on the 240. I'd then personally play for 2 targets, one here and then a retest. We then do have a euro dollar bat pattern that's set up. I think we can see it on the 5 range better. Yeah, let's go to the 5 range. So it is looking like this. A fib on from our swing low to our swing high. We have X to A to B, B to C, CD completion down here at 112.13. We also have, did we have anything on the pound dollar? Let's just go and have a look. No, what we do have on the pound yen, it's not very clean if I'm honest. Let's go to the 60. In fact, no, I'm going to do the higher time frame analysis here. So structure level on at our lows, you can see price did not come down to it. And look at what we're doing here. Higher high, higher close, higher high, higher close. Rejection candle, indication that we could go a little higher here. Let's go to the 240. And this is, if we draw out the trend, a new low, outside return, new low, outside return, new low. If I highlight the outside return, we have not come to test it. We've come close, but we've not actually tested it. And I do prefer it when we do test those outside returns. You can also look at this as a retest down here, so maybe you don't want to shoot past this double bottom. Double bottoms are a rotation pattern, and as you can see, we've rotated, we've gone higher as a result of it. Maybe you want to look for something like an AB equals CD pattern and an entry reason in this area. What there also is not on the 60, there's nothing there. It's on the 15. It's not pretty by any means, but you do have, if you look at this leg right here, you've got an ugly pole coming up to the top of a triangle, and then you've got the market coiling just like this. I'm going to draw that on the closes of the candles. Now this is technically valid, 1, 2, 3, 4, and then multiple tests up here. And if you just zoom in, because of this wick right here, it means that we have technically not violated. You could look for an entry reason here. The problem is that we have not violated this level of structure. So I'm going to put a structure level on just here. So there is no initial structure high. These triangles don't always form with an initial structure high, certainly because we've not tested the outside return. There is more probability of this going up higher. I would like to see maybe on the 5 minute a double bottom with a confirmed break above, close above. No, let's just go and check out the 5 range. I bet you there's nothing on it. No. So not a great deal here, but if this is valid for you, swing high to swing low, look for that 127. In terms of pips, there's around 25 pips up for grabs there. Stop placement is a little bit difficult, so this might be one actually where you wait for a breakout, see if you get a pullback, a little bit more confirmation on this one. Let's have a look. Euro Swissy is the next one. This is a trade I'm actually in. Wedge pattern. So here on the dailies, we've actually put a structure level in at our lows just here. We have had a confirmed break below, close below. If we go to the 240, it's just consolidation. If we go to the 60, then this was the trade that I've got involved with. So we've got a directional pole, we've got minimum of 4 touches, we are coiling on either side. And right here, this was a big lower low, lower close candle, and as the market came back, we put in another lower low, lower close candle. So I got involved with this trade, a very small amount of risk here, stops just above these 2 structure levels, and playing for that 127 psychological number. So 26 pips of risks for 76 pips of reward. Just bear in mind again, guys, that we do have news out at 1:30, so expect slow markets, and if you are in lower time frame trades, obviously just be very wary of that. While the FOMC doesn't move like it used to, lower time frame, we still do get those jumps, and we still do have the increased spreads during that time.